Well, when we're looking at US equity indices, it's a bit of a Teflon market where nothing really sticks at the moment. But below the surface, there's things bubbling along and market breadth is fairly poor. It's really 6 stocks, which is pushing up the S&P and the NASDAQ at the moment. Now, we look at market positioning, which in the equity market is incredibly rich and has to be something that's on the radar. We've got OPEX playing through this week, which could be very influential for next week in terms of equity markets. We've got a French election, which is offering some much needed volatility potential in the market. And we also look at the next big trade that could come through and the next big theme that's in the FX market as well. This is the trade-off. Well, hello, I'm Chris Weston from Pepperstone. I'm going to be joined in 2 seconds by Blake Morrow from Forex Analytics, and we're going to be discussing all the factors in these financial markets, whether we're looking at technical setups, fundamental news, thematics that are bubbling along, and how they might play out going forward. We look at the risks associated with that. Mr. Blake Morrow, come into the programme, my good sir. How goes it over there? You're getting very suntanned over there.
I'm definitely getting tan over here when it's over 100 degrees every day. So,
well, you can bring it over here because I live out in the Gisborne Hills or the Macedon Hills, out in rural Victoria, and it's really freezing. And I'm saying that as an Englishman as well. So, that's bring some of that summer over here. But I'll tell you what's it's pretty quiet out there in the markets at the moment. We've gone past all the key data and the CPI and the payrolls and the Fed meeting, and it's a little bit calm. There are things bubbling around which we'll talk about, but bring on the vol, but we're not getting it at the moment, are we?
No, we're not. But, we got a couple central banks coming up. So maybe get some vol in the next 24 hours, right?
Like that. Swiss National Bank could be interesting. Let's explore it in the Market Pulse. We'll talk US equity start with, mate, because we got S&P. We just had the market close there for Juneteenth, the public holiday. But, the NASDAQ just makes new higher highs, and we're pushing 20,000 at the moment. I know OPEX is coming through on Friday, and that could have big implications. You've got the S&P trading, just looking at this sort of 5,500 barrier at the moment. And obviously concentration risk there. I mean, people wheel out these charts of market breadth all the time. It looks really cool and really sexy. But on an index level, it doesn't really give you any edge at all. It's been a very poor predictor. What it does show is that there's some good two-way single stock opportunities, but at an index level, you've got to get your NVIDIA call right. You've got to get your Microsoft and Apple. And right now, NVIDIA is in absolute beast mode. I've got charts around that at the moment. So you can't really derail the equity market until you lose these at an index level. Higher, what derails it?
What derails it?
Yeah.
Well, I guess what happens at this stage in the game is you have to look for the leadership, and you have to watch NVIDIA, Apple, all the stocks that are just leading this charge. What I'm going to be looking for is if they do show some signs of topping, let's say sometime between now and the next time that we're here in a week from now, I'm going to be looking for rotation. And if you don't see rotation, that's when you're going to have a problem on an index level. So, we can roll out all the charts of how unproductive right now being long the Russell 2000 is, or how the Dow is underperforming. All of that doesn't matter until you see a turn in the big ones. You see a turn in the Mag 4. Is it Mag 4 or Mag 5? You see it. You see a turn there. Do we get rotation into other markets or not? There's a few things that do have my attention that. Beneath the surface, you see emerging market currencies that might start to show some weakness, or maybe you have the dollar that might perk up, or maybe gold or silver. But other than that, you got to just be respectful of how strong the Mag 4 is, or the Mag 5 is.
Well, I think, last week my play of the day was long NASDAQ, short Russell. I still think that trade's got a little bit of juice, but what does concern me is positioning, Blake. If I have a look at the Bank of America Merrill Lynch Fund Manager Survey came out recently. It showed that cash levels are at 4%, the lowest in years. So there's this idea of cash in the sideline coming into the markets. I don't buy that. So the market, these guys are fully invested into these stocks. You can have a look at CTA positioning, max long NASDAQ and S&P futures. I go and look at volatility dynamic funds, the insurance pension funds who weight capital into the market depending on realized vol. Their max allocation into equity markets at the moment. The market is market positioning is saturated. Now, that doesn't mean we're going to get a turn. That is not the reason why you get a sell-off in the equity market. What it does say is when we get that thing that causes the sell-off, it exacerbates the actual sell-off in itself. So it changes the market environment, creates higher volatility as the rats all jump ship at once. So yeah, I think market positioning is definitely something that we need to consider. Everyone is invested in NVIDIA and these stocks. It's such a concentrated position.
It is. And you know, when you talk about positioning, that's going to take us to our next subject really quick. You talk about the bond market. You know, I can remember, I'm old enough to remember a time just a couple of months ago where everybody said there's going to be no buyers in the bond market. There's no buyers in fixed income. There's too much supply coming to the market. And all of a sudden, you know, boons are breaking out for reasons that we'll talk about here in a moment. But you see German boons moving. You got the 10-year note that's up near 111. It's really flirting with a big triangle resistance, and I think the bond market is showing us a little bit of a stealth rally, and a lot of that probably has to do with positioning. And you know, there's some economists out there that have coined the term TINA. You know, now there is an alternative into investing in, rather than being in equities. If you think that you're going to get a higher return buying the bond market and just shelving some cash and putting it and getting some yield. You know, these are starting to look fairly attractive, but what does it say to you about the markets, Chris?
Well, I'm not sure at the moment. I mean, I think the market, have a look at the 2-year treasury because it's been trading in a 5% to 4.7% range. What that tells me is the market's just not sure. We're in this kind of hiatus pattern where the economic data is okay. It's not brilliant, where it's cooling down a bit in certain parts, but it's certainly not, you know, in an area that you're too concerned. So I think if it stays in that range, then obviously the dollar's flirting in a range. You've got gold prices trading in a bit of a range. Until that breaks out of that thing, that's kind of my Bible for a lot of the markets at the moment. So yeah, I would be trading that range in twos. I think that's the play. Now, the thing that I think if we go to the next subject is the French elections, because you know, pricing this is just really difficult. We have the polls that suggest that Le Pen's RN party is preferred, or is certainly looking, but she's not going to get an outright majority in the first round. She looks like she'll probably go through to the second round. But then does she chase off against the left, or does she go up against Macron's party? You know, that becomes very difficult in the second round. But if we get a left versus right, the left could be, if they were to get it, the market could really go hard. It looks, the market sort of pricing in an RN Le Pen victory, which I think personally wouldn't be overly bad because, you know, Le Pen wants to become president in 2027. She wants to take Macron if he's still in the position to do so. And she can't do that without the bond market on side. She can't go out and blow up the deficit. So I think it would get really pretty dark if the left come in. So yeah, our ability to price risk around that is going to be very bad. So I think there's some volatility still to had about these two different votes, Blake.
And that left coalition, I think that's the market's biggest concern at the moment. And this is where we have to be very careful about those spreads blowing out between, you know, French and German yields, and yeah, we could really see a significant move in not only in the fixed income market and European fixed income, but also in the FX market as well. And like I said, that's something that's bubbling beneath the surface that we do need to pay attention to, because it could really affect going into our next theme. You know, with the dollar, we've been in this very sideways triangle type of range, and I'm trying to figure out what the next big theme in the market might be. Is it going to be a euro dominated move by, let's say that Europe has Liz
Truss.
Liz Truss, right? Moment, you know, where we have the UK gilt market just, you know, go crazy. Could that happen and really send the euro into a tailspin, or is it the dollar is going to come under pressure because of the deficit spending is so high, or is it going to be maybe Japan finally turns a corner and we start to see the yen rally because maybe the BOJ needs to normalize quicker than expected, which I don't believe to be the case. But I'm looking at what's the next big FX theme that's going to drive, because, you know, when the FX market takes hold and we get a trend, those trends tend to stick, Chris. So what are you thinking as far as FX goes?
I'm not sure. There's nothing really that presents itself at the moment. You know, we'd be looking at relative economic growth trends. We're not seeing, everything seems to be sort of converging quite nicely at the moment. The carry trade I mean, yeah, the big thing at the moment is go and have a look at dollar yen. We've got that at 158 at the moment, right at intervention levels, and the dollar's not even that attractive at the moment. The rate of change is pretty low. So yeah, the yen's not finding any friends at the moment. So it's not really a yen strengthening story. Carry's not really a big theme at the moment. It's not sexy and in vogue. There's not really one thing that really presents itself. I think Europe, there's a political divergence breaking through with left and right, but that's idiosyncratic to the Eurozone. So look, I think it's just, follow the price action, but there's not one key theme that really presents itself, in my opinion, at the moment. But I still think shorting the yen at the moment seems to be the play, right?
But when it does, be tuned in here and make sure you're subscribed to this channel, because we will be talking about it right here on the Trade
We'll get on it there. Anyway, let's go to the charts. Let's go to that's the setup. Well, I can't go past NVIDIA. Not really a huge technical issue, other than this is an exercise in holding, really. Now, how much higher can this go? As a trend follower, you don't really care. I mean, obviously, you want it to go higher, but you don't have price objectives necessarily. You just hold until your stops get hit, and you trail them, and you might use an ATR trailing stop. But this is one that's just going up and up and up and up and up. Now, where does this end? Fundamentally, we've got OPEX this week. On Friday, there's a huge amount of optionality in there. On Monday, we could see some of that optionality expire, come off, and there could be some inventory there. That could cause some vol next week. But, I still think everyone wants to be long this name. The key one is 23rd of August, we're going to see their earnings coming through. I think the market melts up into that. The stock's trading on 50 times forward earnings. I think 55 will cap it. But, I think when we get into earnings, this is going to be the market report where they say, we're at peak gross margins. 78% is no longer the case. We're going to see more like 75%. And that fall in margins, I think, will see people looking to offload, especially if we're trading at a valuation of 55, 60 times, which is punchy. So I think onwards and upwards by dips for now. That's the way I like to play it. But I think we could see people looking to lighten up going into that earnings season.
Boop, boop. Get on the train or get out of the way, Chris. That's the way I like them. All right. So my first setup is going to be the Aussie dollar. And the reason why I want to point this one out, and I know we've discussed it a little bit, but we're really at an inflection point here. We just came off the RBA, which, the RBA didn't talk about cutting, Chris, did they?
Hawkish.
Yeah, it seemed pretty hawkish. Now, the Aussie's been capped at this, it's a 618 retracement around 66.78, but I just call it 67 cents. If equity markets continue to press higher and NVIDIA leads the charge, I have to believe, especially copper's catching a bid or did the last 24 hours, the Aussie might have a good chance of breaking higher. Now, if it doesn't, you also have a good risk reward to be on the short side. A lot of people would argue that in this environment, the Aussie should be rallying. Why it isn't rallying, not sure. So I'm just going to short it as a result. I think it's a really big level to be trading around. I think if you want to be on the short side, you know where your risk is. If you want to be on the long side, you know where the breakout point is. That's why I think it's a very clean setup for everybody right now. And I think you just got to wait for the whites of their eyes. And that's what I'm waiting to do with the Aussie. So,
do you know what?
Like I said,
do you know what,
it's a good setup.
It's a good setup, but Euro Aussie, go and have a look at that one as well, because that is just getting pummeled at the moment. I'd be selling rallies there. But the Q2 CPI number in Australia is going to be an absolute behemoth. I think it comes out on the 31st of July.
Okay.
If that comes out hot, the RBA could feasibly hike rates in the August meeting. That is the talk on the town. And everyone else is talking cutting. RBA potentially hiking, even if it's one. That puts the Aussie as that would be the Aussie as the dominant currency out there. So a long time away, obviously, but that's going to be a huge date for FX traders there. Anyway, let's go to Swiss yen, because we're talking about big dates. We've got the Swiss National Bank coming up in the session ahead. The interesting dynamic here, obviously, we've seen a very, very strong trend. The Swiss franc looks really good. And I'll tell you why. It's because the central bank are actually buying their currency now. They've flipped from a situation where they're selling it because inflational trends were coming through, but now they're actually buying it back, and that's having a big effect. Plus, inflation now in Switzerland is at target. Now, we've got a Swiss National Bank meeting tonight. The bulk of economists, it's split, but there are a few more expecting to see rates being kept on hold. Now, The swaps market, though, is pricing at about 60-odd% chance that we get a cut, 65% chance. So if we do get the hold, obviously, this has got more juice. I like this higher. So it's a coin toss. And for a lot of FX traders, you don't want to be exposed where something could go either way because it's outside of your control and you just want to buy back in. So it is a risk. If you're in Swiss yen positions, you're in Swiss positions, you've got a massive event risk coming through in the session ahead. Now, I'm actually now sitting in the camp that I think that the risks are that the Swiss National Bank will keep rates on hold tonight, and therefore I think there's further upside in a trend that's already ripping higher. But yeah, we'll see. That's one for the gamblers, should we say? But I think I like this one higher.
Very, very strong trend, Chris. All right, the last setup for me is going to be the German DAX. You know me, I always like to say that the DAX is dead, but in this case, we've been ripping for quite some time. We finally completed a butterfly pattern. We reversed below channel support. We're setting up a bear flag pattern. So because we're setting up a bear flag pattern, that automatically, because we're below channel support, I automatically start looking for bearish continuation patterns. In this case, which would be a bear flag pattern. So while the index trades below 18,000, I've been saying 250, but because it's a rising trend line, broken trend line, you can really take it all the way back up to about 18,300. While we're below that level, the risk still favors the downside. Now, this is one of those markets that could get drug up if US equities and NVIDIA continues to go higher. It's just not gonna give us any downside. It just won't, Chris. I mean, it's gonna be pulled by pigtails higher. But if you start to see a little bit of weakness in equities, watch this German DAX. I think it's got a good bear flag pattern setup right now.
Yeah, I like that. Like the pattern, and I love trading the DAX. It's one of my favorite markets. It gets that really nice bit of movement playing through. You've got a bit of concentration risk in there, but yeah, it tends to have that. When the FTSE is trading up 1.5%, you've got the DAX up 2%. So it has that nice sort of more propelled move. So I like the way it moves. To be honest, it's a good vehicle if you want to trade the indices. Anyway, let's go to play of the day. Yeah, I'm gonna keep on the French vibe. Look, I do longer term think there's going to be some fantastic buying opportunities in France. I do see the risk longer term that we're going to see, the government coming in, whether it's RN or Macron or whatever, and as long as it's not the left. Those people going about their business and keeping the deficit at manageable levels, and the bond market buying into that. So there'll be some good opportunities to go long, French debt, even in spread widening, and I think French banks have been pummeled as well. But for now, what I want to do is play, go short the French the CAC effectively, and then go long the Spanish IBEX because of the political insecurities. Spain. Is looking a lot more secure, in terms of the European elections. They had Sanchez had a good win there, whereas France, there's so much concerns around what's happening, both on the first round on the 30th of June, but the second round, most importantly, when the people with the two most votes go through, and then it's going to be a lot of sort of political brinkmanship, parties trying to form alliances to get the 289 seats to form that majority. If it is the left, look out down below because French markets are going to get absolutely hammered. But I think it will probably most likely be a right government. But that the insecurities that we're seeing with pricing risk, the inability to price risk around that, should continue to see the French equity market underperform its Spanish brethren. So I think this ratio goes lower. I like the short French, long Spanish.
I like it, and I noticed you didn't pick long Italy. Just kidding. All right, so my play of the day is going to be the euro sterling on the heels of the Bank of England meeting that is going to happen overnight. So what I do think is happening right now is we have this inverted head and shoulder pattern after the breakdown of the 85 pence level. I think it sets up for sterling weakness overnight. So tomorrow morning, the Bank of England is set to meet. They're not going to move on rates because they don't want to be political, but the voting could show us maybe a little bit more dovishness. We could see some sterling weakness, at which could put us back up at 85 pence. If you look at, a Fibonacci, just retracement, the 38% retracement comes in at 84.90 I think I have it at 84.92. So anywhere between 84.92, 85, maybe even a smidge above 85 pence, just to capture some buy stops. I think that might be a good level to actually play it back on the short side, back in the direction of the euro short sterling, euro sterling, because I do think that the European elections coming up at the end of the month are going to come back into the fold. So you might get a little two-way price action. I'm trying to sell some euro sterling overnight around the 85 pence level, Chris. That's my play of the day.
Good on you, mate. Well, I hope you do well. Anyway, thank you, Blake. Thank you, everyone, for watching and staying tuned for this long. We really appreciate it. So obviously leave your comments down below. Give us a like button, smash the like button if you can. And we'll see you back next week for more of The Trade-Off.